All right, hello and welcome to Camel Finance. I'm your boy Camel, and I've been deciding whether or not I've been struggling with the decision to make this video or not. But at the end of the day, right, I'm a chart guy, and whenever I see people predicting swans of certain colors, right, I usually just tar them with a rookie brush. And you got to understand, like, this is not me trying to be a doom poster. This is not me trying to predict something which, by definition, is unpredictable. But like I said, I am a chart guy, and if you've been following me for any length of time, hopefully you can agree with that at least, right? So, without further ado, you've probably seen this chart before. And this chart, of course, it's a work in process. It's a hypothesis, and it's yet to play out, right? It's yet to complete. But so far, so good, right? Now, regardless of whether I'm right about this blow off top or meltdown, I've just discovered something, or actually, it's not even really true. I've known about what I'm about to show you for a long time, and it's just something that's been plaguing me, and I haven't really known what to do with it. But anyway, I decided to share it. So here is a chart from Bob Lucas, and what this shows, these green arrows at the bottom show the 4-year cycle. Okay, so this is the 2022 bear market low right here in green, right? And if you count 4 years back, there's 2019 and 2018's low, right? Just at the end of 2018. This right here is the C19 plunge, and then 4 years back is there, and 4 years back is there. So this is the 4-year cycle, right, for the S&P 500, and these are 3-month candles. But I want to show you something that is kind of ominous to me. So here is an S&P 500 chart, and you can see that with Bob's green arrows correspond to my orange arrows, right? So this one here is how Bob's got the count marked, and this one and this one. But I have a little bit of an issue with this. See, Bob's idea is that this count is correct, which are my orange arrows as I just showed you, and therefore what comes next, right? We've probably just had 1 year roughly of uptrend, and therefore we could probably expect another 2-3 years up, right? 3 years total, followed by then the decline into the next 4-year cycle low. That's how Bob sees it. But I have a problem with this count. I have a couple of problems with this count. If I zoom in on this chart, this is why I have a problem with this count. Okay, first of all, the low here from the C19 plunge is clearly lower than that low, okay, to start with. But this is also true back here. This is also true where we see that this low is actually marginally lower than this low, okay? So I don't actually like this count, because what this count kind of says, if we're being honest and if we accept the orange arrows, is that we form a cycle low, then come down and fail the cycle, and immediately after printing a failed cycle, remember, a failed cycle means we take out the cycle low, right? It means we undercut that low, wherever that low forms. So we form a cycle low, then print a failed cycle, and immediately after that failed cycle, we go on a big bull run. And it's the same here, right? We get a cycle low, allegedly, that results in a few months, or this is quite a few months, in a year and a bit, of uptrend, followed by a failed cycle, right, where we clearly undercut this low, and then out of that resumes a bull market again. So I don't like this, because that's not typically how failed cycles work. How a failed cycle would work is you come down, once we undercut that low, right, once we close below the original low, it tells us that the remainder of the 4-year cycle should be down. That's what a failed cycle is. And it's not just the 4-year cycle. If we've got a daily cycle for day 40, say this is a day 40 low for the S&P, and we come down into that cycle, if we undercut that low, right, that tells us that the rest of the cycle should be down until we find at least the next cycle low, if not multiple downward declining cycles. So this is just how cycle theory works. So I have a massive problem with the fact that this cycle low, allegedly if it's correct, is undercut here, and then this cycle low allegedly is correct, but it's undercut here. Okay, so I've got a major problem with that. So for these reasons, I actually don't like the orange count that Bob has got, right? I do not like this idea, and actually I much prefer to say, well, that low was below, so I want to mark it here. The C19 plunge was below, so I want to mark this as the cycle low, and then I want to mark this as not the cycle low officially, and the cycle low, the 4-year cycle, is yet to show up. And of course, this count actually matches and marries up with this idea quite nicely. So if we now get rid of Bob's count in orange, and I draw your eyes to this count, this is my preferred count right here. Using the 3 monthly candles, you can see, if I highlight the date here, this is January 2016, 4 years later, January 2020, 4 years later, would be somewhere in this neighborhood now, January 2024. Now, of course, there's a bit of wiggle room, right? There is a bit of wiggle room. We could allow maybe to see the next 3-month candle in April or even as late as July. You can see if I flip this onto 6-month candles and then hover here, this is January 16, this is January 2020, and this 6-month candle would take us all the way out to June potentially, and this would still be a valid count, right? This would still be roughly 4 years apart. So this is certainly one possibility. Like I said, I much prefer this count to the other one because, like I said, this low is below this low is below this low. But the issue here is that tells us we haven't yet seen the 4-year cycle low. So going back to this, why is this so ominous? Well, if you're familiar with my work, all of the research, as you know, points to the fact that we are moving towards this big deflationary bust. But the interesting thing about the charts, right, is, and I say this all the time, the charts are the truth and the charts don't lie. The reason that this C19 sell-off was so steep, if you ask somebody, if you ask a normie in the wild, why was this so steep? They will tell you something along the lines of, because we had to close the entire world down, because there was panic and fear, because nobody knew how severe that thing would be, right? But from a cycle perspective, this was in the charts. And the reason this was in the charts, and I'm not just talking about a decline into the 4-year cycle low, I'm talking about the majorly sharp and rapid near vertical crash was written in the charts, because unlike back here, where we had plenty of candles to unfold into the low, this 4-year cycle got really, really stretched, right? We were still going up all the way until here, right? So the later we go in the cycle, the more severe the plunge has to be. That's why this pullback, this C19 plunge, was indeed a plunge, right? It wasn't necessarily because of all those reasons that you hear. Like I said, that things spread around, everyone was in panic, they had to shut the whole world down. It wasn't necessarily because of that. It was because we got so late in the chart that the only way to restore the balance was to go vertical down. Now, if this is the case, and I actually believe that it is, we've got the exact same setup right now, right? Even though we've had this big pullback, we're still getting very, very stretched in this cycle. If this yellow count that I've got labeled here is correct, and like I said, that is the one I favor because the lows are actually the lows rather than making a low and then undercutting it before we move higher. As this is the count that I favor, and if this is indeed the correct count, which I believe it is, then it tells us that a very, very sharp, sudden drop is coming to force that 4-year cycle low. Now, I could be wrong. Right? I could be wrong, and maybe Bob is right, and this is the count right here, 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 and here, and we've just made one, and like I say, maybe we've got 3 odd years of bull market at least before we have to even entertain seeing a rollover and one of these secular declines. But in summary, this to me has ominous implications. Like I said, super stretched, has to resolve with a sharp plunge. We are now super stretched, okay, looking to resolve with a sharp plunge. This little fractal here at the end, I have borrowed from this. So is this what's going to happen, right? This is where we are roughly. This is where we are roughly speaking. Are we just about to do something like this and then have some kind of unforeseen, unpredictable event that actually is in the charts as we speak, assuming that this count is correct? Now, that's not to say that following this, right, we couldn't do something like this. It's certainly possible, let me get rid of this, that maybe this is what's coming, okay? Maybe we got a couple months up, some kind of unforeseen circumstances, some big shakeout, and then maybe they do the QE bomb here and they run it back hot. Maybe this is the case. So it doesn't necessarily mean it has to be the end of the world. I'm not trying to doom post or call for financial Armageddon. But what I am saying is the later the cycle gets stretched, the more likely it is that we, instead of have one of these type of events, right? Instead of have one of these orderly declines and orderly walk downs, instead what we're more likely to get is some kind of plunge like this. So, and it could of course be significantly worse. Who knows? Who actually knows? I certainly don't. But this has been bugging me for a while because the more time goes on, the more this seems to become validated. The more this becomes validated, the more it seems like we are indeed going to swing into deflation. The more it seems likely that we're going to swing into deflation, the more I want to reject Bob Lucas's count here and accept this count. And the more I'm accepting this count, the more I am forced to assume that thing I don't like to predict, right? That thing that all those rookie accounts are calling for 6 or 7 times a year and never show up. Those things that are, by definition, unpredictable and unforeseen, apparently are due to arrive in the next 6 months, within actually the next 5.5 months. That is what this chart is telling us. So anyway, let me know what you think. please, I would love to hear it. Let me know what you think. Really, honestly and truly never thought I would be producing a video where I'm essentially predicting one of these things, but apparently I am. So take that as you will. And of course, this comes at a time when they are meeting in Davos at the moment, discussing something with the letter X in it. I'll let you do the research on that. And of course, those same people are telling us to perhaps be open to things like cyber attacks and blackouts. So I don't know, right? I don't know. I am by no means predicting that a black swan is going to turn up, right? I'm by no means implying that. But the banks are very vulnerable. Maybe we see a controlled demolition. I have no idea, right? I have no idea. Like I said, I'm kind of annoyed at myself for making this video, but at the end of the day, the chart is the chart and the charts do not lie. So have a look at this, right? Process it. Let me know what you think. I'm your boy Camel. Until next time, cheers. Bye.